Hey guys, so AI stocks are getting obliterated today and the last few weeks, specifically memory stocks. So let's talk about that in this video. I'm going to show you guys exactly what I'm doing as someone who has a $1 million portfolio, something I wish someone had done for me when I was building out my portfolio. But depending on when you're watching this video, as of recording, just for the day, Micron is down almost 9%. SK Hynix is down almost 9% as well. And things are looking pretty grim when it comes to AI stocks and memory chip stocks in general. Now, for those of you that want to stick around, I'm going to go deep into the details as to what I'm doing and exactly why, and why this has worked to build out my $1 million portfolio. If you take a look here, I am down for the week 0.12%, not much. Actually, I believe I outperformed the S&P 500, but I'm actually up from the last few days, crazy enough, even though chip stocks are crashing. And this is because of the method I use to build out my portfolio, right? Let me know in the comments how your portfolio is doing this week. And if you guys want to see which stocks are in the portfolio, which stocks I'm buying and when, and the method I use to analyze stocks, join the private group. Link to that is going to be in the description. It's the private Patreon group. You can also chat with me in there as well. But for those of you that don't want to stick around, I'm going to give you the quick summary of what I'm doing right now when AI stocks are crashing. First of all, I'm not panicking. Now, this is a basic concept, right? And most of you out there say, I'm not going to panic. I'm going to YOLO, all my life savings in a Micron. And if it goes down, I don't care because I'm a long-term holder. But then when that thing starts crashing 10, 20, 30% in a week, that conviction is tested, right? So if you want to stick around, I'm going to show you guys exactly why I'm not panicking and the method I use psychologically to make sure I don't panic and don't panic sell. Focusing on long-term positioning. Again, this comes down to analyzing companies and not just trying to make a quick bet, right? Not trying to flip the stock to make a quick 50% in a few months, but really building out a position for the long term, as I would not invest in a company like Micron, SK Hynix, chip stocks like that, if it wasn't for a long term, at least 5+ year position. So I'm not worried about a 1 week, 2 week dip. Now, psychologically, conviction and positioning is being tested when these stocks are crashing like they are today and specifically over the last few weeks. Now, again, you might buy the stock saying, oh, I don't care, I'm holding it for the next 5, 10, 20 years. But if you haven't done the proper due diligence, if you haven't done the fundamental analysis, analyzing the market, analyzing your own risk management, once that boy starts plummeting, you can easily start to sell, right? And this is where psychology comes into play. So really having that psychology locked down is what allows me to hold through the dip and into that massive upswing that I think we're going to have in the next few months and a few years. And again, if you guys want to learn more about how I do this, I am going to go into detail in a few minutes in this video, but extremely detailed in the method. Again, if you guys want to join that private group. Long story short though, guys, sentiment will shift again over time, right? Now, so in the past couple of years, companies were rewarded by the stock market for spending tens or hundreds of billions on capex to build out AI data centers. Now, over the last few months and few weeks, sentiment has been shifting to more short-term profits, and the market wants to see, hey, are companies getting an ROI on this massive spend? But I want to tell you guys, in my opinion, and based off of my analysis, that the sentiment will shift again over time, right? That will swing back because the market can only take so much good news until these valuations, come back up to a realistic level, right? We've got chip stocks like Micron and SK Hynix trading at like a 6 forward PE when the S&P trades at like a 20, which is completely insane. Traditionally, these stocks trade off book value and not PE, but if you stick around, I'm going to tell you why I think that's going to flip in the next few months and the coming years. And honestly, guys, in the short term, one thing that keeps me locked in with these investments is that short-term big tech profits don't really matter that much, right? And basically, in a nutshell, it's because OpenAI and Anthropic are essentially the tenants who are paying off big tech's investments, right? They're the renters. Big tech owns the property, they own the house, which in this case is the data center. And Anthropic and OpenAI, they're burning cash hand over fist. And to be honest with you guys, if OpenAI and Anthropic were public companies right now, personally, I probably would not invest in them because they are burning cash hand over fist. But in the short term, they are funding the build out for big tech, right? They're funding the build out for Google, Amazon, Meta, these companies, these mega caps that are building out the infrastructure. Their prices are going down because the market's saying, hey, in the short term, we want to see an ROI. The market's becoming short-term minded. But what people don't realize is that big tech is not building out this infrastructure for Anthropic or for OpenAI. They're building out this infrastructure for themselves in the long run. And OpenAI and Anthropic they're simply renting these data centers in the short term. They're essentially, funding this build out for big tech. And in the next few years, once this becomes profitable, who do you think is going to utilize that CapEx, right? Who's going to utilize those AI data centers? Of course, they'll rent out some of that, to Anthropic and OpenAI, but they're going to own that CapEx. And if they're getting massive ROI, they're going to use it for themselves, right? So if you guys want to stick around, I'm going to go deep into what exactly I'm doing as far as holding these stocks and not panicking, the methodology I use to make sure my psychology is in the right place, my analysis is in the right place, and my $1 million portfolio is in the right place as well. But really quickly, before we go into the details as to how I do this, I'm going to quickly do a recap on what's happening in the market today and this week. Now, depending on when you're watching this video, as I noted, Micron and SK are down about 9%. AMD was down about 8% today as well. Nvidia is actually holding up pretty well today, but over the last week, it's down about 4.5%. Ulta Beauty, kind of a random stock to throw into the video, but I want to point out that for the day, it's up 4.5%. This is a major holding in my portfolio. Now, for those of you in the private group, I know typically I don't share these holdings, publicly in the YouTube channel, but I just want to point out, these are the things that keep my portfolio going up on days like this when, things like chip stocks are massively red. These are the things that keep me psychologically grounded when I'm seeing my memory chip holdings go down, because I know that I'm building things out over time, right? I'm not building out my entire portfolio in a day or in a week. These chip stocks, this is a tranche that I'm adding to the portfolio, right? This is a position that I'm building out, but my anchors, things like Ulta Beauty, these are the things that keep me locked in and keep my portfolio doing well when chips are crashing, right? And people sleep on Ulta Beauty. If you guys want to see my analysis on that, again, join the private group as well. Now, memory chips, just to point out, they're doing poorly today and this week, in the last few weeks, compared to the indexes, right? You see the S&P is up about 0.27%. In that same time frame today, these chip stocks were down about 9%. And the equal weight S&P 500 is up 1.17%. It's actually been massively outperforming the weight-based S&P 500, and in the ETF portion of my portfolio, this is something I've been doing as well the last 6 months. I've been rotating heavily into equal weight, and as you can see here, it's been heavily outperforming the regular S&P 500. Again, join that private group if you guys want to see my method behind going equal weight. Mega cap companies are reporting earnings this week, so depending on when you're watching this video, they may have already reported. There's a good chance they did, but we have Meta, we have Amazon, we have Microsoft, and we have Apple all reporting earnings this week. Most of these companies are relatively flat, maybe up or down, a fraction of a percent, but essentially the market's holding its breath, okay? As far as valuating these stocks, the market's waiting to see, hey, are these companies getting a short-term ROI on this CapEx spend? And spoiler alert, Google reported earnings last week. Their profits are up huge. Their cloud revenue is up massively, and the stock still went down. And then, accordingly, CapEx stocks like chip stocks, semiconductors, AMD, Micron, SK Hynix, they've been plummeting as well, despite the fact that Google showed, they're spending tens or hundreds of billions of dollars on CapEx, which a massive portion of that is going to these semiconductors. These semiconductor stocks continue to sell off. And again, that is because of the sentiment, guys. Currently, the sentiment of the market is we want to see short-term profits, or we're not going to let the inflows go to these companies, and therefore the valuations of these companies go up. But we'll have to see what happens, guys. If you guys are watching this video and earnings already came out for these mega caps, let me know in the comments how they did and if they went the way you thought they would. One thing I want to point out as far as sentiment, Apple today, at least as of making this video, crossed $5 trillion in market cap, surpassing Nvidia as the largest company on the stock market. And again, this is aligned with the sentiment in the stock market, whereas Nvidia has been rewarded for spending massively, building out their business to design these chips. And then you have mega caps who have been rewarded from a market cap perspective for spending massive capex on these chips. Now we have a rotation where Apple is really being rewarded for not spending massively on capex, for putting profits before spending on capex, right? They've been really, in the past, the last couple of years, their market share or their market cap has not gone up quite as much as the other mega cap companies for the most part, because they haven't been spending on AI. They've been looked at as kind of behind on AI spending, quite frankly. I think most of you guys know that, especially if you use Apple products. You know, they have Apple Intelligence, but it's been relatively weak. No one really uses it. I don't use it personally. You know, they've been looked at as being a little bit behind, right, with AI investments. And now that things are flipping when it comes to sentiment, the market's looking at Apple and saying, you know what, profits are skyrocketing. They don't have this massive capex build out. So investors are really rotating back to Apple. And I actually want to point out Apple is one of my biggest, by far one of my biggest positions in my portfolio, and it's been doing really, really well. Apple has massive pricing power, guys. I wanted to point out they're launching this program where you can essentially rent your Apple products. You can rent iPhones, potentially Apple Watches and laptops as well. And really this gives them more pricing power. So like if you don't want to buy a phone for $1,000, you can rent it for like $250 a year, give or take, right? So this is why I invest in a company like Apple, because of that pricing power. But if you guys see the headlines here, Amazon, Meta, and Microsoft face skeptical investors this week after Google's reported earnings sparked a sell-off. So like we were saying, guys, the market is skeptical, right? They want to see short-term profits. And on top of that, we have a lot of things like Kevin Warsh on the Fed. You know, as of, posting this video, the Fed has not announced what they're going to do with interest rates. They probably announced that when you're watching this video already. But essentially, they're expected to hold rates steady. A lot of this is due to the fact, with the Iran conflict and oil prices going up. Obviously, over the last few weeks, they've come back down a little bit. But things are really shaky on that front, right? So the Fed is looking at things and they're saying, okay, how can we lower rates if inflation recently already ticked up higher than expected? And then we have this continued conflict, right? Kevin Warsh is getting a lot of heat. Obviously, Trump hired the man to lower rates. Quite frankly, he doesn't have the power to do so on his own. But really, that's another factor, right? This conflict in Iran potentially leading to more inflation. Kevin Warsh and the Fed not lowering rates and probably holding rates steady. Again, if they had lowered them, that would have been a catalyst for stocks as well. But what exactly am I doing in this market and why? Well, as you guys already saw, essentially what I'm doing is holding these stocks, building out these long-term positions, and not panicking in the short term. So why am I not panicking, right? Now, a normal retail investor, someone who hasn't necessarily built out a $1 million portfolio, they're going to look at this market and say, well, I dumped, my life savings into Micron, for example. It's down 10% on the day. I better go ahead and sell before that boy drops down to like 30, 40% down and my life savings get obliterated, right? Whereas someone like myself who has spent years building out a $1 million portfolio, I understand that there is almost a dissonance between, what an investor thinks and what they do. And what I mean by that is a retail investor might say, oh, you know what? I don't care what happens. I'm going to put my life savings, and if it plummets, I don't care because I'm holding for 20 years. But guess what? Rule number one about investing, don't lose money. And typically investors are worried about the stock skyrocketing up, right? So I guarantee you most investors that are investing in companies like Semiconductors currently are throwing their money at the stocks, and they're worried about missing out on that run if the stocks skyrocket. Well, I'll tell you, my psychology is completely flipped, and this is why I don't panic. I'm quite frankly more concerned about the stock's volatility in the short term, and yes, that means to the downside as well. And really, we're seeing a lot of volatility because the market still doesn't know what to do with these stocks, right? Are they going to continue to price them, based off of book value, based off of cyclicality, based off of demand plummeting, every few years? Or are they going to start valuing them based off of PE, price to earnings? Is there not going to be that cyclical issue? Our revenue is going to continue to grow at least at a steady rate, for the next 4, 5, 6, 7, 8 years. The market doesn't know what to do right now. If the latter happens and we go off PE, these stocks are going to skyrocket. If they don't, and the market starts to see, these are going to maintain cyclicality issues, then they're going to stay at book value and these stocks are probably going to go down, right? So in the short term, we have these unknowns, we have this volatility, and that is why, I am focusing on building out my long-term position, right? And because I'm focusing on positioning myself for the long term, I'm not panicking when, there's short-term price fluctuations, even short-term crashes, 10% on the day, because I am slowly inching into that stock. I'm slowly nibbling. And yes, I'm buying SK Hynix, I'm buying Micron. I've had some big buys recently on Micron again. Join that private group if you want to see. But I am not panicking at all. They're relatively small portions of the portfolio because I understand there's going to be volatility. Not only do I understand that, I actually put that into practice, right? So I'm not worried about the stock skyrocketing. I understand that both are happening in the short term. The stocks are going to go up and the stocks are going to go down. And I'm really focusing on building out that position. So when the time comes over the next 3, 4, 5 years, I will capture those gains as they come, right? I'm not worried about capturing the next 3 months. I'm worried about the next 3, 5, 6, 7, 8 years. And again, when it comes to conviction, people that don't understand how to analyze stocks from a fundamental standpoint, how to analyze the market from a fundamental standpoint, how to analyze yourself psychologically, once that conviction gets tested in a situation like this, people start to sell, right? They lock in those losses and then they miss out on those massive gains. And again, if you guys want to see me go even deeper into these concepts and the method I use to build out my portfolio, the method I use to analyze stocks and the market, join the private group called The Method. Link in the description, join that Patreon group. I will go deep. I'm actually building out a curriculum. It's going to take a few months to build out, just so you know, but if you join that group, you could chat with me immediately. Immediately, you're going to see which stocks I'm buying and when. You're going to see my portfolio updates, so like what percentage allocation I have in each stock. Every month or two, I'm going to update that. And over the next few months, I'm going to be building out that curriculum, essentially giving you my brain on a platter, showing you guys how I do everything I'm talking about in this video. And again, in the short term, sentiment has shifted away from these chips, but over time, sentiment will shift again, guys. And what I was talking about earlier in the video is that big tech profits truly don't matter in the short term, right? So I want to separate a couple of things. I want to separate big tech from companies like Anthropic and OpenAI, right? We know those companies are burning cash hand over fist. But companies like Amazon, Apple, Meta, Google, you guys have to understand, guys, these companies own specific niches that are extremely, extremely difficult to get rid of, right? Google saw that they were being attacked essentially by OpenAI, right? Because if people stop using Google search and they start using chatbots, OpenAI is going to eat Google's lunch. Google quickly built out Gemini. It's an awesome chatbot. It's integrated into Google Search as well. And their cloud service, Google Cloud, their revenues were up huge. I think like 60% year over year. Insane for a massive company. So these big tech companies, they have the moat, they have the ecosystem, they have the stickiness, they have the pricing power. So I don't think anybody or most people don't doubt the fact that over the long term, these companies are going to reap massive profits off of AI, right? Now the question is the short term. And people are going to realize that in the short term, this CapEx spending to a large extent is being funded by these money-losing companies like OpenAI and Anthropic. They're essentially renting the space, renting the data centers, renting the racks, renting the chips, and all of that revenue is coming right back into mega cap companies, right? Google builds out the data centers, OpenAI and Anthropic use the data centers, and they get a ton of revenue in, replenishing a lot of that money they spent. That's the short-term benefit, right? And the market's going to realize that. In the long term, again, once that becomes profitable to actually use that CapEx on their own, they're going to start clawing back a lot of that space and using it for themselves. So guys, as far as notable drivers for the market right now, I think I'm going to save this for another video. This video is getting a little long here, but let me know your thoughts in the comments below. Are you guys bullish on the semiconductor space, specifically Micron, SK Hynix, AMD. Personally, I'm extremely bullish, and I continue to add them to the $1 million portfolio as well. Again, building that out slowly over time. So let me know how you guys are doing in the market this week, and I'll see you guys in the next video.